Aging has been on my mind a lot lately with parents, grandparents, the changes that come along with it. I've not only had experience with this, but clients, coworkers, friends of mine. Seems like a lot of them have had that experience even recently, within the past few months, or at least within the past few years. One issue has come up a couple of times that I'd like to address, which is when a parent moves into a full-time care facility, whether it's a nursing home, maybe even hospice, something like that, the expenses can be profound. They can be extremely large. And one way to generate a fair amount of cash fairly quickly is to sell the parent's home. You've got to be careful when you're doing this. What I've seen is there's a tendency of the parent to want to gift the home to the children and then have the children sell the home, and then they can pay for whatever the care is that's needed at that time. I would advise against this. You see, when you sell your home, you get a $250,000 exemption of profit for each person. So if you're married filing joint, you get $500,000 of profit. So either $250,000 or $500,000 exemption from any profits that you make on the home. That means you take whatever the sale price was, subtract whatever you bought the home for, more or less, and there's your profit. So if you don't even sell the home for $250,000, you have no profit, as long as you have lived there for 2 of the last 5 years. If you do not own the home and you haven't lived there or you haven't lived there for 2 of the last 5 years, you don't get the exemption, or you at least get a smaller amount of the exemption. So what I see when a parent gifts a home to a child and they quitclaim the deed is now the child is stuck with having to pay taxes on the profits on that home. This can accumulate very quickly, and it can amount to tens of thousands of dollars very quickly. Another way that I've seen it done is a parent knows that the home is in need of some repairs and says, okay, and I've even had a discussion with someone about this very recently. They said, I'll just sell the home to my son or daughter. I'll let them take care of whatever repairs need to be done, and then they can sell the home and keep whatever the profits are for themselves. That way I've got the money that I need, and they get money that they need, and it's a win-win situation, right? What if there was a way to avoid taxes on all of that? A legal way to avoid the taxes on all of that? You may not be able to avoid all the taxes, but you can get that $250,000 exemption, or in this case of who I was talking to, $500,000 exemption on the sale of the home. Why not keep it in the parent's name, have the child do whatever repairs are needed on it, and then sell the home? The child can, or the parent rather, can still keep whatever money the child was going to pay for in the first place, and then gift the rest to the child, and then you have an extremely reduced amount of taxes to have to pay in that situation. Something to think of, food for thought. If you have not lived in a home for 2 of the last 5 years and you're thinking of selling it, talk to your tax advisor first. Talk to your accountant. Stay informed, stay wise. We'll talk again.